Oke, presentasi akan dimulai dalam 3, 2, 1. Good morning everyone, my name is Muhammad Yasin Arumi and today I will be presenting the week 2 portfolio analysis of JP Morgan's. Our primary objective this week was to transition from a conservative mindset toward a more active and also stock-focused strategy to achieve superior capital appreciation. So a major highlight of our week two activity was the strategic addition of Inco or PT Vale Indonesia Tbk. We didn't just follow a trend, but our decision was backed by three core pillars. First of all is a government intervention. The Indonesia government is aggressively cutting nickel production targets of 2026 from 379 million tons down to 250 million tons. This 34% cut aims to correct the 2025 oversupply and also restore the average selling price. Since Indonesia supplies nearly 50% of a global demand, this is a massive catalyst for Inco. Second of all is a fundamental analysis. Inco is showing exceptional growth. Their net income grew by 103% year-on-year and gross profit jumped 141% year-on-year. Furthermore, with a forward PE ratio of 17.29 times compared to its current 45.12 times, the market is clearly projecting much higher future earnings. And the last one is a financial health. For risk management, Inco is incredibly stable. It has almost no long-term debt and an Altman Z scores of 9.31 and placing it in a very safe zone regarding a bankruptcy risk. A current ratio of 2.73 ensures they have the liquidity to navigate any global economic uncertainty. Moving on to our development strategy, we utilize an active management framework through a core satellite model. So we divided into two, which is a defensive core and also an aggressive satellite. In the defensive core, we maintain stability and also liquidity through banking giants like BBRI and also BMRI. And in aggressive satellite, this is where we seek an alpha. It includes CDIA, Wi-Fi, PSAB, and now Inco. And because CDIA and Wi-Fi perform exceptionally well in week one, we decided to let the profit run while diversifying into Inco to spread our sector risk into the commodities and also energy theme. And let's look at the numbers. Our initial capital was 5 million rupiah with an initial NAV of 5,000 rupiah per unit. By the end of the week two, our total market value reached 5,076,000 with 246,380 rupiah remaining in cash. Using the NAV formula, asset minus liabilities divided by unit, our new NAV is 5,322. This represents a 6.45 growth in just 2 weeks. We achieved this while maintaining 4.6% cash buffer, giving us the flexibility to handle sudden market volatility. Overall, I am satisfied with learning about the capital market and now feel confident investing in aggressive instrument like stocks. However, I must be honest that I'm still dissatisfied with our company's performance. A major point of concern is that our portfolio measurement calculation are still below standard, which is something we must rectify. And I enjoy the technical challenge of calculating potential returns and risks using software and also historical data. And conversely, I found rebalancing to be the most difficult process as it is requires deep analysis and also constant observation. And to improve, we must maximize our portfolio and portfolio selection because we are still underperforming. And we also need to expedite rebalancing and evaluate the portfolio more frequently rather than leaving it untouched uh, without analysis. So in conclusion, while we have achieved a positive NAV growth of 6.45%, there is a significant room for improvement in our analytical depth and also measurement standards. That's all from me. Thank you for your attention.
Okay, hello, my name is Fadgam Gani Azizi. Today I will present you the week three portfolio performance, which will be start with the market context. Next. Okay, so during 13 to 17 October 2025, the Indonesian stock market faced significant downward pressures, where IHSG dropped around 4.14%. The key global driver was a risk of sentiment due to US and China trade tension, including the discussions about additional tariffs. At the same time, global gold prices is strengthening and reached new highs, which created a strong narrative for gold-related stocks. Next. Okay, in week three, we exited the Wi-Fi positions as a disciplined profit-taking decisions. We sold 200 shares at 3,900 and received around 42.3% return. The main reason to exit was that the price had already appreciated more than 40% from the average entry. In addition to that, the Wi-Fi attempted to break psychological resistance around 4,000, but it failed to hold that level and show a rejection. As we can see in this chart, the price immediately reversed and broke the key support levels with the high follow. The sharp drop until 3,200 indicates that there are distributions rather than continuations. So by selling earlier, the portfolio avoided a significant drawdown and preserved realized gain. Next. So after realizing profits from Wi-Fi, we redeploy the capital into new opportunities using a combinations of momentum screening and price-based screening, but with different roles in the portfolio. First, we bought 3,300 shares of BBRM at 90. The main thesis here that it was high beta short-term trade that shows a low nominal price, strong trading activity, and the sign of accumulations around 90 to 91 price range. We also considering supporting fundamentals such as reported profitability improvement, and the main driver was the trading momentum and the liquidity. Second, we bought PSAB 500 shares at 605. The justification was stronger theme support. At that time, the public narrative around gold was very strong and the gold prices were reaching new highs. So PSAB show a heavy trading activity and strong earning revenue growth that the stock with both momentum and thematic screening. Next. This chart shows the portfolio compositions after 3 weeks of rebalancing. The largest weight of BMRE at 28%, followed by BBRE at 23%, which we kept as a relative defensive anchor because banking tends to be more stable during volatility. Then we held INCO and CDA to maintain the exposure community industrial related to risk. So overall, the portfolio was balanced between defensive large cap and selected higher risk position to pursue upside. Next. Okay, this slide summarizes how portfolio develop over time. The market value declined from the initial period into week one, then recovered in the week two, that continued rising into week three. The gain and loss show a strong improvement after week one, and finally, the asset chart at the right shows an overall total asset increasing from week one to week three, which means despite the market volatility, the portfolio management strategy preserve and capital growth. Next. And finally, I calculated the NAV at the end of the week three. The NAV is calculated by adding the market value stocks with the liabilities and divided by the number of outstanding unit. And we finally got around 5,900, which an increase from the week one and week two. I think that's all from me. Thank you. Oh, last one, I think for the self-evaluations, I am personally satisfied with the portfolio management. From the beginning, we consistently applied the core investment strategy. And despite the market being very volatile, we still able to achieve a positive contribution to portfolio, focusing on the high conviction trade and following structured decision-making process. The most valuable part process for me was the in-depth market research that combining market condition, sector narrative, and stock level analysis. With that, I was able to identify the opportunity before the market stocks has a strong performance. On the other hand, the most challenging part was managing emotional pressure in high volatility conditions. This is an area where I believe I can improve. If I have to repeat it, I would do the same overall strategy, but refine the diversification approach. Thank you.
Okay, let's move on to the week 5 deeper analysis. First, let's take a look to what happened on the market around the 27th October. First, from the mixed market sentiment and micro data. On the 27th October 2025, the Jakarta Composite Index showed mixed moves. It opened with gains but also closed weaker later with notable selling pressure in some parts of the market. Foreign investors were still selectively net buyers in blue chips, showing confidence in larger, stable names like banks despite volatility. Domestic macro signal at the same time point to Bank Indonesia holding rates at 4.75%, supportive for credit growth and equity market while lowering the cost of capital. Next, first shift in investor flows. For 27 October specifically, broker commentary noted funds flow shifting from bonds into equities, especially towards big bank like BBRI, as money rotated into higher return assets. Next, for the related news, we have from Bank Mandiri or BMRI, released Q3 for the 2025 result on the 27th October, showing profit contractions around 9 until 10%, which likely weighted somewhat on sentiment but was offset by strategic commentary on digital growth and credit expansion. And Bank Mandiri also announced considerations of a share buyback program, indicating confidence by management in long-term value. This can stabilize share price and attract long positions. Next. So here for the portfolio development within week 5, the portfolio strategy for week of October 27, 2025 is definitive a stronghold driven by one set of key for window dressing and institutional accumulation within the Jakarta Composite Index, rather than viewing the current 4.8% floating profit as an exit signal. We interpret it as the validations of a robust trend. Liquidating now would expose the portfolio to reinvestment risk precisely when foreign capital inflows typically target big cap assets. The synchronizations of gain across diverse sectors, such as we are in the early stage of a broad-based rally, making this the optimal time to let profit run rather than cap the upside for short-term gratification. Next, please. So here, the deeper reason why we hold our stock in this week. So for the core allocations, which is balancing the beta and alpha, our convictions is anchored by the dual engines of banking and commodities. BBRI and BMRE serve as the portfolio stability anchors, having breached key resistance levels, like they act as the primary proxies for the index year-end performance. Selling this now would mean forfeiting for a high profitability rally that this giant historically lead. Simultaneously, the commodity allocations provide high octane growth, with Inco capitalizing on the major nickel downstream narrative and PSAB serving as a critical hedge against macro volatility. This mix ensures we capture both the steady institutional flow into banking and explosive potential of recovering metal prices, balancing defensive stability with cyclical upside. Next, for the value unlocking and capital efficiency, beyond the core holdings, the retentions of special situations asset like CDA and BBRM offer significant unpriced optionally emerging sector infrastructure and logistics that are poised for catch-up rotations as the economy accelerates. The current state of portfolio, wherever positions in the green, indicates a healthy, uniform market trend rather than isolated speculations. By maintaining a full team positions, we not only leverage the specific operating strengths of the asset, but also maximizing capitalized efficiency by differing intersectional costs, allowing the compounding effect to fully materialize as valuation head toward their year-end target. Next. So here we have the NAV calculations from the fund asset uh, minus fund liabilities divided by number of unit outstanding, and we got the number of 5,376.6966. Next, for the self-evaluation, Overall, I am satisfied with my experience of learning about the capital market through this course. Like this way, my first time investing in stocks after a long period of hesitations, as I previously felt uncertain and lacked confidence to start. The course was highly insightful, especially for someone like me who has initially had very limited knowledge of the stock market. For throughout the learning process, I gained a better understanding of how the capital markets works and how investment decisions are made. So for the best process, the most valuable part of learning process was discussing stock options for investment with my group. During these discussions, I gained many insight from my friends who already have long-term experience in the stock market, like theoretical perspective, strategies, and real experience that were not only theoretical but also applicable in real market conditions. And as someone with the least prior knowledge in the group, I feel that I absorbed the most learning from these interactions. And from the evaluations, for future improvement, I believe we should be more active in analyzing market conditions and increase our trading activity in a disciplined manner. By conducting more frequent evaluations and applying the concept learned in a real-time market situations, we can maximize learning outcomes and improve investment performance. So that's all for me for the detailed analysis for week 5.
Okay, so now we're gonna head on into our week 8 JP Morgan performance analysis. We can head on to the next slide. Okay, so the market context from the week 8, which is 17th of November to 21st of November 2025, is like during this week, the overall market sentiment was quite cautious. Investors were worried about the interest rates, so they were careful with their money. This affected us negatively because commodity price like nickel and gold dropped. This caused our money stocks, for example, Inco and PSIB, to go down. However, we saw an opportunity. Investors started moving their money or rotating into defensive bank and renewable energy. This gave us the signal to make a tactical move into a stock called ARCO. Next slide. Now we're gonna see our portfolio development. As you can see here, you can see the detailed list of a stock that we bought and sold in this table. The most important takeaway here is the result. After weeks of up and downs, we finally achieved a strong growth of positive 8.2%. We made a net gain of over 430,000 rupiah. We ended the week with a total assets of roughly 5.6 million rupiah. This proved that our strategy to trade actively this week was successful. Next. Now I'm gonna explain about our defensive core banking and aggressive satellite that we have energy and logistic. We divided our portfolio into two sections. Our first one is defensive core. We held onto our banking stock like BBRI and BMRI. They acted as our safety net and provide a stable small gain of around 1.6%. Second one is our aggressive satellite. This is where we took our risk. We identified that ARPO as a high potential stock because of Indonesia renewable energy target. Meanwhile, BBRM of our logistics section, we decided to keep holding BBRM because despite it being stagnant in previous week, our thesis on the logistics sector recovery remains. So we are being patient. Next. So this is our key trade analysis. What our action is to buy ARCO of 100 share of 1,665 shares per lot and another 100 shares of 705 share per lot. After that, we sell ARCO for all of the share for 2,300. As the result, a massive 25.87% gain with a profit of 59,500 rupiah. And why it worked? It's because according to our group report, we spotted a special situation momentum in ARCO. The market sentiment for renewable energy spiked this week, unlike our mining stocks, which are struggling. With a global commodity price fluctuation, ARCO offered a unique high growth opportunity. We executed a fast trade in and out within the week to capitalize on the short-term volatility rather than holding it long-term. This single trade successfully offset the losses we took from Inco and PSIB. Next. Now we're gonna head on into our NAV calculation to verify the value of our investment unit this week. We calculate the net value asset value or NAV based on the total outstanding. The formula is found asset uh, and fund liability divided into number of unit outstanding, which the result is 5,698 for the NAV. Next. So this is the self-evaluation for me overall. To conclude, my overall satisfaction, I'm satisfied that we were agile. We didn't just wait. When we saw the momentum in ARCO, we acted fast. We acted fast. This proves that being active in the market works. And our best process is that the process I liked the best was spotting the momentum ARCO of 25.8%, as mentioned before. And what could be better is that our biggest mistake was hesitation. We fall in love with our mining stock, Inco and PSIB. We hope that they will go up, but they kept going down. We should have cut our losses sooner. And for the last evaluation, if I could repeat the process from the beginning, I would want my company to more discipline with cut loss as a sample from the Inco and PSIB. Uh, and then we should be brave enough to sell it early and move to next capital to winning sector like we did with ARCO. This agility is key to maximizing our profit and protecting our capital in the future. And that is and that is my analysis from week 8 of JP Morgan. Thank you.
Hello, everyone. My name is Nelson Rashidi, and I will be presenting our report for week 11, covering from 8 to 12 December, which also marks our liquidation week. Next. So, beginning with the market context, we observe a clearly cautious tone and subdued risk appetite. Investors remain selective as markets continue to digest earlier signals linked to global interest rate uncertainty from earlier mid-November, which limited broad-based follow-through. In parallel, commodity names faced profit-taking spillover. Following the mid-November run-up, nickel and gold experienced short-term corrections, and that cooling effect carried into this week. As a result, mining-linked exposure stayed sensitive to short-term sentiment swings, particularly names such as INCO and PSEB. Okay, next. So moving on to portfolio development. In week 11 is structurally different because we were required to sell all holdings and convert the portfolio fully into cash. The portfolio began the week at 5,800,551 rupees and ended at around 5.3 million rupees, resulting in a weekly return of negative 8.3%. Gross realized profit and loss was negative 75,000 rupees, and total selling fees amounted to 7,000 rupees. So the closing value reflects realized outcomes net of transaction cost. Importantly, while the 8 to 12 December period recorded a realized weekly loss, the semester overall still closes above inception. Compared with our initial capital base of 5 million in week 1, the end of semester cash value was of 5.3 million and represents an overall gain of 319,000 rupees, which is approximately 6.4% calculating from this method. Next. On key trade outcomes, since liquidation was mandatory, our focus is on realized contribution at the close. PSAB was the primary positive offset and helped moderate the overall drawdown. BBRI and BMRI closed modestly lower, and the key takeaway is correlation. Banking exposure moved together, so the combined sector effect mattered more than any single position within an isolation. INCO weakened in line with the commodity cooldown, while CDIA was the largest drag, highlighting how higher volatility exposures can disproportionately influence results when risk limits are not enforced earlier in the holding period. Next. Next, to standardize performance reporting, we calculate a net asset value using our unitized framework. NAV per unit is defined as fund assets minus fund liabilities divided by units outstanding, with liabilities set to 0 and unit outstanding fixed at 1,000. Our end of week assets of 5.3 million imply an NAV per unit of 5.3 thousand rupees. This provides a consistent unit-based measure of performance and clearly reflects the final semester end value after liquidation. Next. Next. So for my self-evaluation as a student, this project made capital markets far more tangible because it translates classroom concepts into measurable portfolio outcomes through NAV. It also reinforces that results are driven by process and risk management, not only stock selection. In terms of what went well, we executed the mandatory liquidation fully and cleanly in this week, and we incorporated transaction fees transparently. We also retain at least one strong contributor in PSAB, which demonstrates that discipline selection earlier in the semester can still translate into realized gains at the end. In terms of improvements, the experience highlights several areas that I need to strengthen. We should manage risk at the portfolio level by treating correlated names, particularly within banks, as a single exposure bracket. We need a stricter downside control earlier in the semester because a fixed liquidation date removes the option to wait for recovery. We also need stronger discipline with volatility and position sizing for higher beta names like CIA and rely more on confirmation from price action and liquidity before scaling positions. Finally, we should have set clearer and more realistic take profits targets during the semester because locking in gains would have reduced the reliance on end date pricing and improved the quality of realized outcomes. Well, that concludes my week 11 report. Thank you for listening.